NBC TV 18, celebrating 15 years of leadership.
Welcome back. You're watching Prime Property. PropTiger.com, in which Rupert Murdoch's-led News Corp has bought a 25% stake, came out with its review for 2014. That study shows just how bad last year was for India's property market. New launches down 45 to 75% across the big property markets, and that's including Bangalore, Noida, Pune, Mumbai, Thane, Navi Mumbai, Gurgaon, Bhiwadi, Chennai, Hyderabad, Kolkata and Ahmedabad.
Yeah, so recently with the RBI announcing the rate cut, we expect, the market will kind of revive over the next 6 to 9 months. The commercial property market, we have seen has started showing good absorption since the last month in terms of, absorption of IT spaces, and that's good for job creation, and hopefully, that will translate into, residential sales. Of course, the report shows that the new launches have gone down by almost 54% year on year, and we expect, the 2013 levels to be met, in 2015 again.
But Prasad, this much is clear that 2013 and 2014 were disastrous for India's property market. Now, you engage a lot with builders. What is the sense that you're getting? Are they going to get more realistic and maybe cut prices in 2015?
So price cuts, of course, have already happened, I would say, in the last 6 months. So we don't expect the prices to correct, further, leave alone some, micro markets. But the prices today are pretty much reflective of the construction costs. So we are not expecting any drastic changes on prices. But I think the positive economy, the positive outlook in terms of job creation, the positive outlook in terms of people seeing, salary increases, that would, get people to start betting again on real estate.
So the market is still so subdued, but you believe that prices have bottomed out. Therefore, would your advice then be this is the right time to buy, and if someone has the potential, this is the correct time to keep holding on to properties as well?
Yeah, so prices, in our opinion, have kind of bottomed out. We might see some correction in some markets, as I said, but overall, we think, the prices have kind of bottomed out, and a lot of people, we think, will come into the market. So it's a good time to hold because we don't see any further, price correction from here.
PropTiger's review of 2014 shows that new launches are down anywhere from 50% to 75% across the big markets. Are you expecting that trend to continue in 2015?
Not really. What we think is that since the demand had kind of, subsided, developers responded with fewer launches. But our expectation is this year we'll see a bump up on the new supply hitting the market again.
Okay, so you believe new launches will pick up activity in 2015. Now, I want to get city specific, but before that, I want to ask you, which are the better cities to invest in?
From an investment point of view, Bangalore and Pune would be, good cities which have given good returns to investors over the last 1 year.
Now let's get city specific, beginning with the National Capital Region, often called the speculator's paradise. Gurgaon still out of budget for many people despite being a dead market. What's your outlook for the Gurgaon market?
So specifically on Gurgaon, I think definitely, prices have corrected, and I see that, it has still some scope in the Gurgaon market given that demand has completely vanished. So we do expect Gurgaon to kind of see some price correction in the next 6 months to propel demand. Dwarka Expressway would, of course, be a good area to look at there.
Okay, so price correction on the cards as far as Gurgaon goes. What about Noida? What's your outlook for the Noida market?
Specifically on the Noida market, of course, if you look at sales, sales are down, but the market in terms of pricing still looks very attractive given the infrastructure. So our expectation is that volumes will definitely pick up in Noida, but we don't expect any price correction. The prices will start, looking up in the next 9 to 12 months.
Okay, so you're expecting prices to rise in Noida. Now let's head west to Mumbai, perhaps the country's most overheated market. How are you reading this market?
So if we look at the Mumbai market, of course, prices did look up in certain areas. I think demand still exists in Thane and Navi Mumbai, and that will be the key driver for Mumbai for this year. We also expect a lot of supply to hit the central Mumbai market, which hasn't seen supply in 2014.
What about Pune? I know you're very bullish on Pune. Devendra Fadnavis has said that he wants to make Pune India's new IT capital. I don't know how realistic that is. But, what are the growth corridors in Pune?
So Pune market in 2014 again was very stable. We saw some price correction leading to, demand again picking up. Affordability again is pretty good. I think job creation is something that will pick up in Pune given the new initiatives by the Chief Minister. So we expect the Pune market again to kind of look up in 2015 and deliver good returns. Hinjewadi and Wagholi would be two key areas to look at.
What about Bangalore? Bangalore was considered to be, the best performing market in 2014. Do you expect that to continue in 2015?
So Bangalore has been a key market in 2014 for, if we look at supply, we look at sales, as well as if we look at price movement, we have seen some price movements on the positive side in Bangalore. So we continue to expect, given that there is a huge IT population looking to, buy homes, and affordability hasn't kind of gone out of the reach of the customer. So we expect the same euphoria to continue for Bangalore. We think Whitefield as well as Hebbal would be key areas to invest in Bangalore.
Your report also shows that there were many launches by state departments, government departments in 2014, and that made up a huge chunk of the new launches that we saw in 2014. Do you expect that to continue?
So we, of course, have seen a lot of initiatives from the government in terms of launching affordable housing across India. And that we think, we saw almost 40,000 units across various initiatives by Delhi as well as other, government organizations. And that we think is a great initiative, and we think that there should be more momentum put into that to achieve the goal of the Prime Minister to achieve, housing for all by 2022.
Now let's get commercial. 2014 was a bad year for the housing market, but that cannot be said for the office market. According to international property consultant CBRE, commercial leases in the fourth quarter of 2014 stood at more than 9 million square feet, and that's the highest quarterly level since 2011. Corporate real estate absorption rates rose by approximately 20% quarter on quarter, and the overall take-up of office space in 2014 rose by about 10% year on year.
I do expect in 2015 it will improve. Reason for it really is there's a lot of consolidation that took place with all the corporates. It also shows that, post the last quarter of 2014, we saw the maximum leasing happening, which normally happens towards the end of the year. People take decisions, but also because of the new government coming in, because of sentiment improving, because of the US economy picking up a bit. I think that all reflected in the office market here, because even today, majority of the office space take up in India is by ITS companies, and most of them are American multinational companies. So the US economy and bit of improvement in sentiment in India did make a difference.
But Anshuman, HNIs cannot invest in the commercial story that you just spoke about. They're not going to go out there and buy, full IT buildings. How can they participate in India's commercial story? And I mean outside of real estate investment trusts.
HNIs do get to participate, not at the level what REIT will allow, because that will be a larger number of retail investors can put in money. But HNIs come in and they buy strata office space across major cities. So one is that you would see the large institutions buying office buildings. Then there are individuals who buy small floors or small areas in a floor, which is another market which has been there for quite some time and continues to be there, where they get to buy from anywhere from 500 square feet in a floor in an office building to 10,000 or 20,000, and so that way HNIs do participate, and they have been doing that because you do get a yield of anywhere from 9.5% if you do that. But yes, what gets reported largely is the bigger deals, which again in 2014, what was interesting is for the first time we saw companies like Blackstone and others who put in money in large office space buildings, which we had not really seen in the past.
So from everything that you're saying, should we also expect rentals to go up in 2015?
See, rentals are a straight function of supply and demand. So far, the supply is still quite a bit. So I don't expect rentals generally for the IT space to pick up so much. However, interestingly, rentals have already gone up in certain micro markets. If you look at the commercial office space in Bangalore, if you look at commercial office space in Gurgaon, and in some parts and in some parts in Mumbai, the rentals actually went up because in that micro market, especially for commercial office space, there was limited supply and demand picked up. But for rentals to pick up further will be a slow process and only in few micro markets. In other places, there's still a lot of supply which needs to be absorbed. Gurgaon would be an exception because Gurgaon, a lot of the supply has been absorbed. But in other areas, the rental increase will be slower. But certainly, if you look at since last 2-3 years, office rentals, especially in the IT sector, has been really low and have not moved up. I think 2015 we will see some appreciation in rentals.
Okay, Anshuman, give us a number. Hazard a guess. By how much can rentals go up?
Anywhere from 10% onwards, depending on the micro market, and especially in the commercial office space in certain micro markets it could be slightly more, but 10 to 15% would be the range. I normally office rentals don't improve more than that in a short period of time.
Well, that's all the time we have for this edition of Prime Property. Do remember, you can always email us your feedbacks and your property queries or even experiences with developers that you may want to share. Our email address is primeproperty@network18online.com. You can also tweet me. See you same time next week.
CNBC TV 18, celebrating 15 years of leadership.